How to grow a small forex account, part 2 of 3. Hello and welcome back to Bunnex Investment Group. This is the second part of our guide to trading a small forex account. This video is a continuation of the first part, and consider watching it if you haven't done so. We are now going to jump into the actual trading of the small account. But before we jump into the whole video, make sure you hit that subscribe button and check the notification bell icon so that you'll be notified each and every time we upload a new video. Please check out our free Telegram channel where we share free signals, trading advice, as well as support. The link is down below. So here is what we will go through in this video. We are going to talk about the pairs to trade on your small account. Then we are going to issue a small account intraday strategy. So make sure you watch till the end for you to comprehend each and every concept that we will discuss. Here are the pairs to trade on a small trading account. So focusing on 4 to 5 instruments at most gives much better results. This is because you'll be able to know their movement by heart. As the old saying says, focus on one thing and the magic will come into play. I'm sure you have heard this. Trading is 10% analysis, 80% waiting, and 10% execution. This means you will need to be highly patient to make it in this game. So the bar statement is, if you cannot be patient, trading is not for you and you better retire. So here are the pairs with the least spread on most brokers that you can focus on. This is Euro against the dollar, USD against CHF, USDCAD, ODST, NZD, USD, Euro JPY, and GBP USD. You are not limited to only these pairs. You can as well select the ones that you love, but try to look for those with lower spreads, because on a small account we'll be trying to put tighter stop losses. So pairs with higher spreads will definitely eat up much of your stop loss zone. So here's the small account intraday strategy. Firstly, risk management is of paramount importance. Good traders are those that can manage uncertainty properly. So if you can visit any of your nearest hedge funds institutions, you would know that one of the qualifications to be a hedge fund manager is to be a very good uncertainty manager, someone who can manage the unknown. So it should be noted that we do not trade every day, but we show up every day. Setups comes up randomly. Therefore, we cannot say we trade on such a day, or how many trades per day or session. So as said in part 1 of this series, we strive to get at least 2 hours on each and every trade. The initial risk for our $100 capital, which is our model account, is $5 or 5%. You can do it proportionally with whichever amount you wish to start with. So therefore, for a 15 pip stop loss, we will use 0.03 lot size, or 3 micro lots. So the setup that we'll be looking for, and here is the forward for that. For a small account, we need to be highly accurate and selective. The setups that we will only take are the M's and W's only. These will be taken in line with the peak that has logged. So by peak clock, we mean there are 2 moving averages that have given a crossover. We'll talk about that later. We'll use the M15 time frame in our trading, which is basically categorized as one of the smallest time frames. So we'll need these EMAs to help us visualize the setups. These are exponential moving average 5, 13, 50, and 200. So trading is all about looking for the simplest things. A simple system is also simple to execute. I'm sure you're probably asking yourself that we are going to implement a very simple system. So am I going to make money? This is the statement that should answer you. A simple system is also simple to execute. All we need is at most 10 trades in a month and an accuracy rate of 50%. This means out of 10, we need to get at least 5 correct and 5 wrong at most. However, even if we drop to 4 out of 10, it will be still okay. This means we will not have pressure on trading every day. Mind you, we are growing this small account on a consistent equity growth manner. We are not blowing it twice or thrice in a single day. We'll be looking for M15Ms and Ws after 50-200 crossover. So the first thing that we need to see on the charts on the M15 time frame is to see a 50-200 crossover, whatever. Then after that, we need to see an M or W in line with that crossover. If the crossover is pointing us up, it means we are looking for W for a W. If the crossover is going down, it means we are looking for an M. I'll illustrate to you the M's and the W's that we'll be looking for. So this is a template of the M or the W that we'll be looking for. The W will basically be an inverse of this thing in this manner. So to deem our M a correct M, we need to see a crossover of the 513 here, then a crossover of the 513 here. Then after these two crossovers have been issued, seeing clearly the first leg, we now need to wait for the second leg, and any candlestick reversal pattern at this point is a confirmation for entry. So we need to see a crossover like this manner, then the second crossover like this manner, and after that we need to get a candlestick reversal pattern in the second leg. So let's go over the examples and show you. I've been writing the dates, and each and every date is for 2021. So this is 15 June 2021 on USDCAD. On USDCAD we had 250 crossover here. Then after that we have the second leg, then crossover of 513, crossover of 513, and an entry here was going to be taken after a candlestick reversal pattern. If you are not well versed with candlestick reversal patterns, you can enter after candle closure above the 13 EMA. Then this was USDCAD for 22 May 2021. We had a 50-200 crossover. After that we had another crossover of 513, candlestick closure below or candlestick reversal pattern. At this point was going to be our entry trigger. Then this is 17 May USDCAD. I tried to look for USDCAD mostly because some people may say this doesn't happen on the charts. So this is basically a small proof for that. 50-200 crossover. After that we had the first leg, 513 crossover, 513 crossover, and the second leg. We now need to look for an entry trigger or candlestick closure below the 13 EMA. So with that being said, our stop loss must be at least 15 pips above our entry point. Then our take profit must be at least 30 pips to 45 pips, depending on your threshold of patience. You can as well go for 3:1 reward to risk ratio or 2:1, depending on your patient threshold. Then 13 May USDCAD, we had at the 5200 crossover. The first leg was issued here, then the second leg here. Candlestick closure above the 13 EMA was going to give you an entry signal. Then you could get your 2:1 reward to risk ratio, as you can see. Then on 14 April as well, on USDCAD, we had 5200 crossover. After that, we had the first leg, 513 cross, 513 cross, and then candlestick closure below the 13 is going to give you another entry trigger, your stop loss 15 pips above the entry point. Then your take profit, if you're taking a 3:1, you're going to get your take profit somewhere at this point. So that's basically how you will be trading on this small account. Try to be selective. That is, try to look for pristine setups. Don't just take anything for the sake of wanting to trade each and every time. So lastly, here is a broker for the small account. HOTFOREX gives tight spreads and fast execution. You can as well check this broker using the link down in the description. On that note, we come to the end of our video. Thank you for watching. Like and subscribe.